All right, we are live. Thank you for joining me. I'm Mitch Goldberg. You're watching my live stream. Be the boss of your money. It's a show about taking control of your finances. If you don't take control of your finances will take control of you. It's one way or the other. It's not in between or a little bit of both. And there's no such thing as a happy balance. You must be in control. This is the one area where you should always be a control freak, your money. So let's take a quick look at things here. We're going to roll the intro first, but I want to tell you what we're going to talk about today. Some year end things that you could get done now to make your life a little bit better, and some things to think about for next year. So let's roll the intro. We'll do a quick market update, and then we'll get on our merry way. Here we go. All right. Thank you for joining me. I'm Mitch. If you have any questions about what we're talking about today, ask me in the comments. I love hearing from you. Words of wisdom, words of encouragement are always greatly appreciated. So let's just do a quick market update look. It's not really a show about market update. What I'll do is when I show you how the market, I'll add in some perspective, some things to think about, and then we'll get into some things you should be thinking about doing financially before the end of the year. And I think these will help you for next year. So let's just take a quick look at how things look. Okay, let's put myself up in here. All right, so Dow continuing its winning ways. It was up Friday last week. It was up today another 157 points. New high for the year, by the way. NASDAQ up 28 points. S&P at 4,600 up 18 points. Gold below 2,000 again. Gold just can't hold a bid. I don't know what the deal is. I'm not a gold bug. I do know that crypto is down a lot today also, and I think gold and crypto move in a similar direction, although crypto is obviously, I don't want to say obviously, but it moves in a substantially more magnified way. Yields on the 10-year, although up from the 4.1% range last week, they did back off a little bit today, just a little bit, and the VIX is still in the 12s, which is really just, I don't think something a lot of people expected to happen. Maddie, I see you out there. Thank you so much for joining me. If you have any questions, certainly hit me up in the comments below. We have our calls today, okay? Oppenheimer has one of the most bullish outlooks for 2024. Seeing the S&P 500 going to maybe 5,200 or higher. And let's see, who else is out there? Citi sees 5,100. They see a big year for the stock market. But Evercore ISI, all right, they see the S&P falling the first half of next year down to the 3,900 area as a recession materializes and politics amplify volatility, and then they expect the market to bounce right back up to 4750. That is a huge call there. I mean, a major trading range to drop all the way down to 3970 and back to 4750, which would give us about a slightly better year than where we are now. And just to reiterate, the Dow the S&P closed at 4,600 and change. So I don't really think that's an over. That is a pretty big call. We shall see. Crazier things have happened, but what I tell you is, J.P. Morgan, by the way, or is it Morgan? J.P. Morgan said they see a down market next year. We don't. These are interesting, and I look at these, and they're headline grabbing. They get readers, and the more readers the websites can have, the more advertising dollars that they can earn. So that's all well and good, but you and me, we're not making financial decisions based on someone's market call. How many analysts expected the market to do so well this year? I'm just going to give you a quick return on how the S&P 500 did for the year to date. All right, here, let's take a look at this, okay? S&P up, well, let me just blew that out there. S&P up a little over 20% on the year. Pretty good year. How many analysts were expecting that? It was pretty bearish. And I just think that, most people take what's going on toward the end of any given year and they extrapolate it into the future. Last year was rough, this year's good, and that's what you get. But it doesn't mean you change your investment and financial plans based on someone's call, which may or may not be right. The whole point is that over time, I want the big screen for this. The whole point is that over time, we expect the economy and the stock market to grow, whether it be from real growth or from inflation. We expect growth. And this is why we always tout us financial advisors that that's how you, by investing, that's how you could beat inflation. In other words, you don't make a lot of money. You don't make a lot of money and you don't prepare for retirement with a savings account. You do it with an investment account because a savings account over time becomes depleted just from inflation, whereas an investment account can grow above and beyond inflation, although over the short term, there could be a lot of big downs, a lot of volatility, which is what scares people away. And then eventually people get back into it and the market goes up to new highs. I saw a meme, not really a meme, I saw a post on Wall Street Bets on Instagram today, and it was just so great. It was from the TV show 60 Minutes about people talking about how much they lost in their 401k plan in like 2008, 2009. And it was such a bearish. Anybody watch it like wants to sell out of everything. And then what happens is the stock market's up, like the average 401k plan is up 465% since then. Just another example of what good staying power means, right? So that is what's going on. If you notice today, I don't know, well, I'll just let you know, the Dow is up more than the NASDAQ, okay? So the Dow is up 0.43%. The NASDAQ was up 0.2%. But what gives? Well, industrials went up today, okay? Honeywell up 3%, ABB up 2% plus. But you see the green over here? You're not really looking at what I'm looking at, okay? But let me go back to that. You see the line over here? This is your low to your high. So the right side is your high, the left side is your low. Do you see how so many stocks are toward the right side? Oshkosh, Granger, for people who get things done. Look, Boeing I think Boeing may have set a 52-week high today, but it's been a really good day Boeing hit a 52-week high today. I mean, just think about it. The stock rocketed to 230 and change, dropped back down to the 190s like a month ago, back up down to almost 250, hitting a new 52-week high. The all-time high in Boeing is a little over $400 a share. But still, Boeing is really flying high. You get it? No, you don't like that one? Oh, Boeing's flying high. Soaring like a turkey. Now, it's Boeing. Boeing is 52-week high. And the industrials, the bank stocks are really what's pushing the market higher and broadening out from just the big tech stocks, although the big techs are doing okay, although Oracle is down about, I guess it's down about 10% after market trading, big miss on revenue expectations. The way this market handles things, the stock will go down, it'll probably bounce back up. That's the way this market's been trading. A couple of things to do before year end. Okay. First of all, let me fix my chair, because my furniture distributor owes me some new chairs because the hydraulic thing is not working well. And I'm going to have to start calling them by name if they don't do something, but I'm sure they will. FSA. Do you have an FSA account? You need to use that up by the end of the year. You use it or lose it. A lot of people are going to be like, I didn't know I was losing it. You took my money. You have to use it. It's time to now go to your HR department and raise your 401k contribution. Okay, the limits have been raised, and you may be able to put more money into your 401k. But more important, if you're not maxing out your 401k, and most people aren't, maybe you're putting in, let's say, $12,000 a year, you could maybe up the percentage of your income to go into your 401k. You've probably gotten a raise this year. You may be getting a raise for 2024. Consider raising your 401k contribution, even if it's just a little goes a long way, especially when you have time ahead. Another thing you could do is rebalance your accounts. Have you gotten too heavy into technology? Is a particular tech stock too big a portion of your portfolio? I'm not saying sell it all. Maybe you want to scale some back. We could talk about this on a one-on-one level. By the way, if you want to have a conversation with me on a one-on-one, just reach out to me and we'll talk about your portfolio, investing, economy, all these good things, but more important, your personal finance, maybe what you need to do next. And no obligation, but I love hearing from you. So let me know if you want to talk about that. I'm a financial advisor with over 30 years experience. And remember, mistakes are our best teacher, but you don't have to just learn from your own mistakes. You can learn from the mistakes of others, and you can learn from the victories of others. So I can share with you 30 plus years of how investors have made mistakes and how investors have overcome challenges, how people have overcome challenges in their financial planning to wind up having a better retirement than they expected. Sometimes it's not always a matter of making more money. Sometimes it's a matter of maximizing what you can do with the money that you already have. These are the kinds of things I love helping people with. A couple of other things you could do by the end of the year. Make sure your beneficiary designations are up to date. People have gotten married, divorced, deaths in the family. If you have somebody as a beneficiary on a particular account and that person is no longer with us, you want to make sure you add new beneficiaries to your portfolio. Changing your beneficiaries, updating your beneficiaries is your way. It's your way of taking control of what matters to you most. So don't put that off. Couple of other things that we could do by the end of the year: tax loss harvesting. Maybe you're down in a particular stock. Maybe you could sell it and buy another stock with it. You can't buy something substantially the same as you sold, or else you violate the wash sale rule. Like, you can't sell Google Class A and then buy back Google Class C, although I don't know anyone who's losing money on Google at the moment. But you really have to buy something different. You speak to your accountant about it. I'm not a tax advisor. I'm not your mama. I'm not your papa, but I do talk about taxes in as far as they have to do with what I do in terms of getting a tax deduction for a 401k plan, things like that. That's important stuff. So tax loss selling, maybe you've got some losses to take. Maybe you could get them now, but make sure you have a plan for those funds. If you took tax losses 6 months ago and you didn't put that money back into the market, you didn't reinvest, look what happened. Everything is up a lot now. So you probably would have been better off not taking the tax loss. We have to check for sure, but make sure you know what you're going to do with the money that you take a tax loss on. Maybe you're going to sell a bond fund and buy another kind of bond fund because bonds are down this year. So these are the kinds of things that you could be looking for, which might not mean more dollars in your pocket now, but they could help your dollars go further down the road, which is just as good as having more money. All right, that's about it. I thank you so much for watching the show. If you have any questions, reach out to us, Client First Strategy. And I want to wish you a very good night and hope you're having a good start to your week. Take care.